Hey, welcome to Audio listeners. We're all about breaking down the best ideas from great books.
Want to learn from all those amazing books out there, but you just can't find the time?
That's exactly what we do. We pull the key ideas from the best books on growth and motivation.
So you can boost your personal growth, gain powerful knowledge, and find that daily motivation for free.
Here's the cool part. Every book is a complete playlist, so you can learn from start to finish.
So go check out the playlist section. You're going to find something that helps for sure.
And hey, if you like what we're doing, do us a favor and hit that like button.
You're not going to want to miss what's next, so make sure you subscribe for the latest books.
And one last thing, what book should we cover next? Let us know right down in the comments.
You know, we all have these huge financial goals, retiring comfortably, maybe sending our kids to college. But what if the advice we always hear, just work hard and save, isn't actually enough? Well, today we're diving into a case study that shows how a simple shift in your thinking, a little bit of what we call financial intelligence, can solve some really massive financial problems. So, right off the bat, the source material draws this really powerful line in the sand. On one side, you've got the work hard and grow rich path. That's the one most of us are taught. And on the other side, there's the think and grow rich path, which is all about ideas and strategy. And that one little shift in perspective, it's the absolute key to unlocking some of our biggest financial puzzles.
Okay, so that's the million-dollar question, right? It's one thing to say, hey, change your thinking, but it's a completely different thing to actually do it. Well, probably the best way to really get a new way of thinking is to see it in action. And that brings us to a story about a very, very common and very stressful financial problem.
So let's kick things off with what the source calls the savings trap. This is a situation so many of us can relate to. You're doing all the right things, but it just feels like you're running in place, barely making any real progress. And here is the challenge that really gets our story going. You've got a young family trying to hit two gigantic financial targets at the exact same time: saving for their kids' education and also putting money away for their own future. It's a financial tightrope walk that can feel absolutely impossible. The story starts with a friend who was doing everything right. He was diligently month after month after month putting $300 away into a college fund. He was doing exactly what we're all told to do, just be consistent and save. And after years of doing that, of that consistent effort, he'd managed to save up $12,000. Now look, that's not chump change, but when you're looking at what college costs these days, you can just feel how slow and kind of discouraging that path is. He was working hard, for sure, but the results were just trickling in. And what was really happening is that he was stuck in the standard formula. This is the financial playbook we're all handed, right? Work hard, save your money, borrow from the bank for big things, and pay a ton of taxes. It's a path, yeah, but it's often this slow, painful grind that doesn't solve big problems very efficiently. He needed a totally different approach.
And this is where everything changes. This wasn't about finding more money to save. It was about a completely new idea for the money he already had.
This is the core concept right here, financial intelligence. It's not some magic trick. It's simply the ability to look at a problem like that college fund and apply your brain. Apply information and knowledge to find a better, faster solution than just grinding it out with brute force saving. Okay, so here's how he put that intelligence into action. The real estate market in Phoenix at the time, it was in a slump, a total buyer's market. He found a house from a motivated seller who was asking $102,000. He comes in with a lowball offer of $79,000 and it gets accepted. The down payment was just 10% or $7,900. And where'd he get that money? He pulled it right out of that slow-growing college fund. And check this out. This is the best part. Right away, as soon as they rented the place out, it started making money. After paying the mortgage, the insurance, all the expenses, the property was putting an extra $125 into his pocket every single month. His money was finally working for him. Now, this is where the story gets really, really exciting. That one little investment wasn't the end game. It was just the start of this financial snowball that was about to start gaining some serious momentum and size as it rolled downhill. And the growth was just staggering. I mean, look at this timeline. He starts with that $7,900 investment. Just 3 years go by, the Phoenix market bounces back, and he sells the house. That initial seed money has now turned into nearly $80,000 of capital. A couple of years after that, the next asset gets sold, and that $80,000 has ballooned into almost $330,000. This is exponential growth fueled by strategy, not just by saving. So, you might be wondering, how in the world did that snowball grow so fast? Well, he used this brilliant, totally legal financial tool called a 1031 exchange. Basically, it lets you take every single dollar of profit from selling one investment property and roll it directly into the next investment without having to pay any capital gains tax right away. It's like keeping the entire snowball intact, allowing it to grow at maximum speed. And this just brilliantly shows you the other side of the equation, the cash flow. It wasn't just the asset value that was growing, the monthly income exploded. From $125 a month with that first house, it jumped to about $1,000 a month from the next investment, which was a mini storage facility, and then to over $3,000 a month from the project after that. And guess where all that income went? Straight into the college fund. So we've seen the how, right? The nuts and bolts of the deals. But honestly, the most important lesson from this whole story is the why. It all comes back to a fundamental shift in your mindset.
This is such a powerful concept when you let it sink in. It means that wealth isn't just about a pile of cash you're trying to accumulate. It's generated by the ideas you have, the problems you solve, and the strategies you use. The friend in our story didn't create hundreds of thousands of dollars with hard labor. He created it with an idea. And this one just drives the point home. The outcome, what was actually in his hands, it changed dramatically once the knowledge in his head changed. He went from slowly saving to actively building real wealth because he learned a different way to play the game. This directly challenges one of the biggest excuses people have for not getting started. I mean, this story is the perfect proof. It didn't take a lot of money to begin this journey. It took $7,900 and a really good idea. Knowledge was the real starting capital here, not a massive bank account.
Okay, so this is a fantastic story, but what does it actually mean for us? How can we start playing it smart? Well, the source material offers a super simple, really actionable framework to get started. It's a simple 3-step process. First, you have to educate yourself. It all begins with knowledge. Then you practice what you learn, and crucially, you start small. You don't need to find some massive, life-changing deal. The whole snowball we just saw started with one small, simple rental house. And this is really the final takeaway. Playing it safe, just hoarding cash in a savings account, it might feel secure, but as we just saw, it can actually be a trap. Playing it smart means using your financial intelligence to make your money work for you, creating a much faster and more effective path to your goals. So that leaves us with one final question to think about. This isn't about changing your whole life tomorrow. It's about starting with a single thought. Based on what you already know and what you see around you, what is one small idea that you could act on? All right, when you hear the word income, what's the first thing that pops into your head? Probably a paycheck from your job, right? Well, what if I told you that's just a tiny piece of the pie? See, not all income is created equal. And honestly, getting your head around the different kinds of income, that is one of the biggest secrets to actually building real wealth. And this whole idea really comes to life with Robert Kiyosaki's famous story, right? The tale of his 2 dads. You've got his poor dad on one shoulder saying, go to school, get good grades, find a safe, secure job. You know, the classic advice. But then you have his rich dad on the other with a totally different take. The rich don't work for money. They make their money work for them. It's a huge contrast, and it really makes you wonder which path actually works. So what's really going on here? What's the fundamental difference between these two mindsets? It's not just about jobs versus investments, you know? It goes way deeper. The real split is in how they understand the different ways you can actually earn money. And that right there, that's the core of what we're talking about today, the 3 types of income. See, it's not just about what you earn, it's about how you earn it. And I'm telling you, this one simple idea is the key that unlocks the entire rich dad way of thinking. Okay, first up, we've got earned income. This is the one we're all familiar with, right? It's the money you get for working. You trade your hours for dollars. Simple as that. This is pure poor dad territory. That paycheck from that safe, secure job. All right, next is portfolio income. Now we're starting to step into rich dad's world. This is the money you make from paper assets. You know, things like stocks, bonds, mutual funds. A great example is someone like Bill Gates. His massive wealth isn't coming from a salary he draws from Microsoft. No way. It's from his investments, the growth, the dividends, all that good stuff. And last but not least, we have passive income. This can come from a bunch of different places, but the classic rich dad example is always real estate. The key thing to remember here is the word passive. This is money that flows into your bank account from an asset you own without you having to show up and punch a clock for it every single day. So let's just recap real quick. Earned income, that's from your labor. Portfolio and passive income, those come from your assets. But, and this is a huge but, look at how they're taxed. Earned income, the money you literally sweat for, gets hit with the highest taxes. Passive income, the lowest. It's kind of crazy when you think about it. The system is literally set up to tax the money you work for way more than the money your money works for. Okay, so knowing the difference between these incomes is great, but it's just step one. Using that knowledge, that's where the magic happens. And this gets us to the absolute core strategy that Rich Dad was all about, a simple little thing called conversion. And boom, here it is, the whole strategy in one sentence. The real goal isn't just to make more and more earned income. The goal is to take that earned income and use it to build up your other income streams. That ability to convert, to change one type of money into another, that's the whole ballgame. So what does this actually look like in practice? Well, it's honestly pretty simple when you break it down. Step one, you go to work, you get your earned income. That's your starting fuel. Step two, you take some of that money and you buy assets, things that are going to generate that portfolio or passive income. And then, step three, you just let those assets do their thing, working for you and creating brand new streams of income. But why is this so powerful? I mean, it sounds simple, right? Well, this conversion strategy works because it has two massive advantages that can literally change everything about your financial future. Advantage number one is something we already touched on, and it's huge: taxes. I mean, just look at this. When you convert that highly taxed earned income into portfolio and passive income, which are taxed way less, you legally and smartly get to keep more of your own money. It's not about cheating the system. It's about playing the game by the same rules the wealthy have been using for decades. Okay, this second advantage is honestly even bigger. It's about getting to real financial freedom. Picture this. Your passive and portfolio income grows so much that it completely covers all your bills. At that point, you don't need your job anymore. You can still work, for sure, but you do it because you want to, not because you have to. I mean, that's the dream, right? That's the ultimate goal. Now, I know what you're probably thinking. As soon as I say stocks or real estate, this big, scary word pops into your head: risk. And look, that's a totally fair concern. It's the one thing that stops so many people dead in their tracks. But let's try to think about that a different way. You've heard of Warren Buffett, right? Probably the most famous investor on the planet. He has this amazing quote: risk comes from not knowing what you're doing. Think about that. The risk isn't really in the stock or the property itself. The real risk is jumping in when you don't have a clue what you're doing. That's risky. And that's the game changer right there. Real investors, they're trained, they're educated, they have a plan. They're confident not because they never lose, but because they're not afraid of losing. They know how to manage risk, and they even know how to make money when the market is going up or down. It all comes back to one thing: financial education. Which brings us to the most important part of all of this, because this isn't just some interesting theory to talk about. This is about your money, your choices, and the power you have in your hands, like right this second. Kiyosaki says we're all given two incredible gifts: our mind and our time. And what we do with those gifts, well, that's completely up to us. The financial path you're on isn't decided by your boss or the government or the economy. It's decided by the thousands of little choices you make every single day. Think about it like this. Every single dollar that comes your way is like a vote for the kind of future you want. You can use that dollar to choose to be poor by just spending it on junk. You can use it to be middle class by spending it on liabilities, things that take money out of your pocket. Or you can use that dollar to be wealthy by investing in yourself and buying assets that put money into your pocket. Every dollar is a choice. So I'll leave you with this question. The next time you get paid, that next dollar that lands in your account, just stop for a second and think about the power it holds. Think about the choice it represents. And ask yourself, what will my next dollar choose for me?